Hello, this is Brian Resney. It's question and answer day, and one of the questions I'm getting a lot is about Greece and what impact Greece either defaulting on their debt or leaving the euro has on the overall either U.S. economy and the stock market or the world stock market. Bottom line is this: Greece is insignificant to the U.S., more significant to certain countries in the Eurozone because some hold more debt than others. So ultimately, if you own a lot of assets in Europe, I would be trimming those assets. We've seen some outperformance of Europe this year. It's going to be reversion to the mean. I firmly believe you need to be more in small and mid cap in the US and less in Europe. So if you have a weighting in Europe of more than, I would say, 10 to 15%, trim your European exposure. If you have more than 10 to 15% exposure to the emerging market economies, I would trim some of that in addition. One of the things you have to realize, Greece doesn't have a big impact here because we really don't hold any of their debt. And they really have no significance to our growth of our economy. I could see Greece leaving the Eurozone or defaulting could further weaken Europe and their growth prospects, which would ultimately, I think, bring their stock markets down between 3 and 8% over a 2-week rolling period, let's say, once they officially decide to leave. It's not official yet, but I ultimately believe sometime in the next 6 months to 3 years, Greece eventually, the can will be being kicked, and they'll either get kicked out or they'll decide to leave on their own. If you're not a client of our firm, give our office a call. We always like taking on new clients who are nice people to do business with. If you're ready for real money management, we're ready to help your portfolio grow in the right direction. Have a safe and profitable day.